Hello, I'm Mark from Retirement Line, and in this video we're going to be looking at annuity rates. What are they, how they're calculated, and how you can get the best rates. Before we begin, let's just clarify what we mean by an annuity. An annuity takes your personal pension savings and turns it into guaranteed income, either for life or for a fixed period of time. There are other pension income options available to you, but an annuity is worth considering if you're after guaranteed income unaffected by market performance or investment returns. One thing that determines how much annuity income you receive is the annuity rate offered by your annuity provider. The higher the rate, the higher the income. For example, if you are purchasing a lifetime annuity with a fund value of £100,000 and were offered an annuity rate of 5%, that would equate to an annual income of £5,000. If you were offered an annuity rate of 6%, that would equate to £6,000 per year. It's important to note that some older style personal pension schemes may well have something known as a guaranteed annuity rate, or GAR. These are typically found on personal pensions set up before July of 1988. Guaranteed annuity rates tend to be much higher than what's available on the open market today, so please do make sure you check with your current pension provider if you have one of these valuable benefits. If you have a guaranteed annuity rate or you don't have a guaranteed annuity rate, it's essential to make sure you shop around on the open market to get the very best annuity quotes available to you. The accepting of an annuity rate is so important because once the annuity has been set up, that's it, either for life or for the length of the fixed term. That's why it's so important to make sure you've shopped around in the whole of the open market to ensure you've got the best annuity rate available to you. As an annuity broker, Retirement Line will shop around between all of the available annuity providers on your behalf to ensure you are getting the best rates. And it may well surprise you to learn that there can be a significant difference between the highest and lowest annuity quotes at any given time. So how do annuity providers calculate annuity rates? Well, firstly, they look at things that are personal to you, in particular, your life expectancy. The more years the provider is expecting to pay the annual income for, the lower the income will be. For example, someone with a life expectancy of only 10 years can expect a higher income than someone who's expected to live for another 20 years. So that's why age matters. Typically, the older you are, the shorter your life expectancy, resulting in a higher annuity rate. Annuity providers will also consider your health and lifestyle information when setting the annuity rate. To put it simply, the healthier you are, the longer they'll expect you to live, so therefore the lower the annuity rate. Annuities that pay more on account of poorer health or lifestyle are called enhanced, impaired life or underwritten annuities. They are only available on a lifetime basis and not for annuities that run for a fixed term. Literally hundreds of health conditions and lifestyle factors could mean you are eligible for a higher annuity rate. This list shows just a few of them. Even taking prescription medication for a condition that's under control could mean you are eligible for an enhanced annuity. Make sure you provide as much information about your health and lifestyle as possible when shopping around for a lifetime annuity. Many people miss out on more income by under-disclosing their medical history. Other circumstances may also qualify you for a higher annuity rate, such as your occupation, your working history, and where you live. That's because these also have an effect on average life expectancy. Something else that can affect your annuity rate is whether you tailor your annuity with any benefits or options. If you do, you would normally get a lower rate and less income initially, but the annuity could end up paying out more in the long run. For example, you may want someone to receive a lump sum or income from your annuity after you die. If you do, the annuity provider would expect to pay out for longer, so the annuity rate and income would be less initially. Another example is that you can choose an escalating annuity, where the income increases at a fixed rate or at a rate linked to inflation. Here too, if you choose this option, you'll receive less income initially, but potentially more in the long run. These are all options to consider, and here at Retirement Line we can explain them and provide you with personalised illustrations so you can compare your options. As well as personalised factors, annuity rates are also influenced by economic factors, so let's take a look at those. Annuity providers typically buy government bonds, also known as gilts, that pay a type of interest known as the gilt yield. This is one of the ways that providers fund the guaranteed income they pay to their annuity customers. Gilt yields tend to move up and down when interest rates change. When interest rates increase, annuity rates tend to follow. On the other hand, when interest rates fall, annuity rates tend to fall. Gilt yields and interest rates aren't the only economic factors that affect annuity rates. Annuity providers use additional economic and commercial factors to determine their annuity rates. This is why annuity rates can rise or fall regardless of what happens to interest rates. And finally, as with most financial products, annuity providers do charge fees for the service they provide. But rather than charge these separately, they are typically wrapped up into the product and reflected in the annuity rates. The same is typically true of any commission the provider pays to an advisor or broker who helps you with finding and arranging your annuity. That will also be taken into account when calculating the annuity rate. So to sum up, annuity rates are unique to each individual. They differ from provider to provider and they change depending on underlying economic conditions. Shopping around for the best annuity rate is therefore essential if you are to get the maximum income from your annuity. Here at Retirement Line, we shop around all the UK's leading annuity providers on your behalf to find the best rate and the maximum available guaranteed income from your pension pot. Our annuity specialists can also explain the different types of annuity products and features available to help you choose what's right for you. If you have a personal pension pot and want to find out what your options are and how much annuity income you can receive, please get in touch and we'll be happy to help you.